Good evening. I know I normally start off with the weeklies and really look at the monthlies every now and again. However, I wanted to show you how these levels intersect with each other and why they are so important. Now, if you take a look at the 2008 fall up here, right down to our January 2017, you can see that we retraced back 38.2. Now, I know these are long-term charts, and I know that, it's not brilliant, I suppose, to have a look at them if you're trading short-term. But even if you are trading short-term, you have to be aware of the big levels that the market is watching. You do. You can't not be aware of these major levels that appear on the monthly and the weekly charts. So there you have the big picture of the euro. It's gone up, it's 38.2, extended. But look here, okay, on the 2014 decline, we've gone back nearly 61.8, which is coming in at 125.91. Why am I telling you this, you're asking, when the thing's trading just broken up or broken down at 114.5? Why am I saying this? The reason I'm saying it is because these levels work and intersect with each other all the time, and unless you have at least an idea of where they are, then your short-term trading will be caught out as well. Now, you've got our monthly level coming in, our monthly pivot coming in at 114.06. You've got the 23.6 coming in at 111.91. Now, all right, that's a long way off, but my point that I'm trying to get across is, and I try very, very hard to do so, is that, when these major turning levels are around, you've got to be aware of them. Now, the 55-month moving average comes in at 1463. Yeah, 1463. Our low on Friday was just around about the 1458 area, and we closed at 67. Spooky, yes, but these levels do work and hold as long as you just drop them down. They don't change on the monthly. That monthly moving average is still going to be 1463 at the end of January. It's not going to alter, but what it will do is give you an insight as to how and why the market moves. So now I've showed you that, I'm going to take you back onto the weekly chart. Now on the weekly chart, we nearly got down to our 61.8. That takes into consideration the whole move, 2017 right up to the 2018 highs. We nearly did it, but look, this 200-week moving average cuddled the close. Now, the thing with this moving average, the 200-week, is that, yeah, we broke through it. We did. But as long as the week closed up, then, it was happy days. And this week, the market had it at 113.19. We was nowhere near that, I think we got up to our high one. We've got the 1469, and then we've got underneath that 1381 on those moving averages. You've got your monthly pivot coming in at 1406, and the weekly's coming in at 1475. This I thought was really interesting. It just didn't want to break below this area on a weekly basis, and because of that, the market rallied. Now, all right, it didn't do so well on Friday, I have to say, or Thursday, come to that, really. But as long as we on a weekly can hold this area here again, there should be absolutely no problem with the euro trading higher once more. You know, we do have this big head and shoulder pattern. We can see it on the monthly where it went up to the 38.2 long term and the 61.8 medium to long term. You do have this pattern, and you know, the euro overall doesn't look particularly bouncy, but for trading it intraday or day or over a week, I mean, you could take a position in the euro twice a week, 3 times a week. That's all I do, you know, and you still make money on it. So let's have a look at the daily chart now. You know, the daily chart basically looks a mess, okay? I think that as long as we can hold here on when Europe opens, I'm not talking about the Asia overnight moves, I'm talking about when Europe opens. If we can hang on in there, I don't see any reason why we can't trade higher. We've got our weekly and our daily pivots coming in at 114.86 is the daily and 114.75 is the weekly. Now I've put them on obviously after Friday's close, so it's going to be a little bit more flexible, shall we say. But I do think you're above some pretty good support at the moment. It's only really if we start to break down below that monthly 1406 level that I think the market would come under a little bit more pressure. We are just off of the highs on the indicators. We've got this ROC is not pointing lower at the moment. It's flat line, neutral on the RSI. Can't make up its mind on the stochastics, but we are below here. So as I say, for today, tomorrow, this is the area down to 1406 that we're watching, and I'm hoping it will hold. If not, then we can trade down to this region here, which would be the 1380 to the 1335 again. Okay, that's it from me. I'll catch you tomorrow.